Hello everyone, and welcome again to the Property Experts live at 5 every week at 5 p.m, where Ben and I give you a rundown of our business and what we've been keeping ourselves busy with. And this week is an exciting agenda to be getting on with. Those of you that haven't joined us before, Ben and myself run 5 independent companies that we've grown from the ground up. Some are 6-figure turnover, 7-figure turnover, 8-figure turnover. And we want to share what we're up to with you guys so that you can hopefully learn from our mistakes and join us on the wins. So without further ado, the agenda today, we'll be talking about kitchens going in one of our latest developments in Thame. Ben and I are jetting off on, early next week. I'm flying Monday, Ben's flying Tuesday to join the sea of blue suits. I think there's something like tens of thousands of people in property and real estate joining on the south coast of France in Cannes to talk all things property. So if you're going out there and you want to meet up with us, do make sure you reach out to us. Negotiating after an offer is accepted. Now, this is a bit of a taboo for a lot of people, but I've got some tips for you to make sure that's an easier conversation because we've just recently had to do it. Aura Property Developer Design Challenge. I don't even know what that is, so I'm excited to hear what Ben's going to be sharing on that. Ben's had the privilege of featuring on the Property People podcast recording with Sam Lowney. So Ben will be sharing about how that went today and when the launch and drop will be of that episode. Network in your network. We've been doing a lot of investor meetings and we've learned a lot. So hopefully we can share some true value on what we've learned to raise investment. A lot of people say to us, where do you find your investors? And we'll be dropping some tips on how to make sure that you can build out an investor list like we have of 160 people. 7, why cheap labor is false economy. And we'll be sharing about, I suppose, making sure you do due diligence on what you're spending where and how that actually transpires in our businesses and in also property development. We'll be then talking about building control. Should you go private or the council and what you should be maybe thinking about when taking on building control. We'll be talking about the release of the budget and the multiple dwellings relief that has now been removed, which is a bit of a kicker. I was with a developer today and he said he's actually going to have to re-review a lot of deals that he's got in legals, which you see the real impact of that budget change now and it's real. So stay tuned for that. And then we've got a secret that we're keeping under our chest that we will be revealing at the end of the episode. We're doing a special episode next week. So stay tuned to hear what we're going to be talking about next week when we're sunning it up in the south of France.
Very good. Welcome, everyone. So on to point number 1, which is Howdens kitchens. I mean, I imagine most developers, if they're producing the type of stock that we do, first and second time movers, somewhere between 400 and 600 pounds a square foot resale value. A lot of our schemes will have Howdens kitchens. They are well priced. The quality, I think, is actually pretty decent. Every contractor that installs them knows how to install them. They can pop round and pick up a piece if it's missing, etc. They are well renowned, and I think they're pretty good. We've just been going through the process of getting some designs drawn up for our scheme in St Andrew's Court in Thame, and I wanted to talk through some of those costings. I was actually going to go through it and talk through kind of some of the key costs, but I actually have now decided that we're going to skip it a couple of points and we're going to ask you in the comments, how much do you think this kitchen, the supply only, so this is just supply, so we've got a tool unit, fridge, freezer, oven and microwave, we've got hob, dishwasher, sink, and all of these units, how much do you think that Howdens kitchen costs? Drop it in the comments below if you're listening. We'll come back to it in a few points time.
What's the worktop on it, did you say?
So that is just a compact laminate. Yeah.
Okay. Because that's a biggie.
That does make a big difference. Yeah. And we'll come on to that.
And what's spec appliance?
Yeah. So actually, worth saying this is a Bosch specification on only the units that are exposed. And this, I guess, is a little tip for people. When you want to put in your higher range specification of white goods and appliances in a kitchen, typically we will only increase the specification on the things that can actually be seen. So if you've got integrated fridge freezers, integrated dishwashers, integrated washing machines, those are things that you just can't, you can't see them. So why not just lower the spec on them, have a Howdens own Lamona specification, and then on the things that you can see, like the ovens, the hobs, you can increase the spec on those. We got one in already, Rob. £6,300 plus VAT. We'll see how that fares. We'll see how that fares. Cool. We'll come back to this one then, and just see if there's any more that keep dropping in.
MIPIM, I'll take this one, shall I? So Ben and I have the pleasure to join the Developers Club again to MIPIM. You don't have to be part of the club to go to MIPIM. It's kind of a free-for-all for anyone that wants to go down there. We were with a very high-end, I would say, lawyer that's based in London, and he said it's something like his 27th consecutive MIPIM that he's going to. So he said back in the day it was very London eccentric, and there was a lot of buzz about London and how amazing London is. Now that's not the case. It's all the I suppose other areas of the world that are taking form. So Dubai, Saudi, and all those particular locations. But Ben and I will be heading out there. We're essentially heading out there to expand our network, grow our business. And we're not going to necessarily meet contractors or certain things like that out there, but we're really looking for potentially investment funds, private equity, the bigger ticket stuff, because it is the place to go from a European perspective of property and real estate. But obviously there's a lot more presence there. A few people that we went with last year actually said that they had really good success actually pinning down councils. Councils go there to represent, see what other councils are doing and businesses are doing, what tech's being integrated. And I think it's a really good place to rub shoulders with the right people. And I was actually kind of thinking to myself today, in MIPIM, if you try and get a meeting with someone or you bump into someone, they don't have to go home that night to their kids and family. They're in MIPIM for 5 days. They're much more open to having a conversation with you, especially if they've got a beer in their hand. So it's a great place to meet people, to grow and scale your business. And that is exactly why we're going out there. So if you're heading out there, we'd love to meet up with you. Send us some messages. We've only got a few slots left, so make sure you jump to it and book us in, or vice versa. We'll book you in. But we're super excited to be heading out there next week and trying to manage the business while we're away next week, and obviously bring you some lovely content next Friday as well.
Awesome. Oops. Negotiating after the offer is accepted. I don't know how I can keep the picture of the kitchen up whilst you do this, but anyway, you crack on.
Yeah, so this is a huge sort of taboo in the I know super bullish developers that go, we'll get the contract on our lap, then we'll do all the work, and then we'll figure out what price we can pay with it. I think that is it's bullish, and essentially you can't really understand the details of property until you've been through full conveyancing, seen the whole contract, seen the title, and gone through that process. So even though I wouldn't necessarily recommend doing that to the nth degree, there is a good balance between how much due diligence you do on a pre-purchase. We're probably somewhere in between. We do the best work we can from a desktop and from a viewing and from an investigator perspective to bid on something. But there is a lot of work that has to go in after the bid is accepted to get something bought. And this is why our follow-up process works so well. And it's 1 in 3 deals fall through between offer acceptance to actually exchanging. But the principle is I wanted to touch on negotiating after an offer has been accepted, because it is difficult to have that conversation. You do feel like you're going back on your word. And here's 3 tips to help you arm that conversation to make sure that you can basically pull the deal back round to where it needs to be. The first one is so let's say, an issue has arisen. You've had a down valuation, or your lawyer's picked up a big issue with a title, or it actually transpires that the agents put out some marketing particulars that don't have accurate plans on it. What the first question I think to myself is the issue with the asset? Now, what you need to remember is if you're a buyer and there's loads of other buyers out there and the issue is with the asset, any buyer is going to have this issue. So we always take the view that if the issue is with the asset, it needs to be addressed by the seller. So that, financial gain or delay or whatever it needs to be does need to be stomached by the seller. Now, they in principle might not want to do that because they already think they've got a price agreed and they're in legals. But if you explain to them, this issue is with your asset, anyone else buying this is going to have this problem. Your best bet is to stick with us, but the prices needs to be changed, or the duration between exchange and completion needs to be changed, and negotiate that. So negotiating after an offer is accepted is doable, and I would promote that you should do it if you find issues down the line that are detrimental to the scheme or based on the asset. Second is, was the issue known? So if something's being marketed and there's a restriction on the title, or there's an issue with the building, or something crops up that wasn't known from the outset, then I would 100% recommend that you push that again back on the seller, because you didn't know about it. It's something you've either both discovered or they've hidden from you during that process, which kind of brings me on to my next point. Was the advertising compromised? When you look back all the time when we're bidding on something and we've got something agreed and it's under offer, and then we have to go back to them, we always look at the original sales memos and look at the communication between us and the agent or us and the seller to see if this particular issue was advertised or put out there. So for an example, we're buying a site at the moment that it transpires that the actual size of the site had a huge discrepancy with what was marketed. So we had to go back through the marketing facilities, check the sizes on there, and then we renegotiated it based on the new sizes. And it was a very simple negotiation, because we said, if the building was the size that you said, and we were paying, for an example, £250 per square foot, you're actually 8% inaccurate. So we're going to reduce our price 8%. And it's an easy conversation to have, and you push it on the asset. So there are 3 short recommendations that I would advise. And don't be afraid, kind of when you're spending money in legals and you've done a valuation and the lender's there, it's difficult to sort of tread on those eggshells around the vendor, because you don't want to scupper the deal. But it's all about positioning it and making sure that if it is an issue that was unknown or with the asset or falsely advertised, you make sure that's clear in your negotiations. Obviously, don't start with a negotiation, raise the issue, and then the agent normally says, well, what do you want to do? And say, well, the fair thing to do, not what I want to do. The fair thing to do is to do X, Y, or Z. So just a little armor in your sort of bow that you can go back to a seller, and don't be afraid to negotiate it. Just tread, do tread carefully and be cautious that they've agreed a price and they're excited. They've already probably spent the money. They're probably thinking about their grandchild's university fees, or what car they're going to buy, or what other asset they're going to buy and not add value to it. Who knows? But have those in your armory and don't be afraid to do it.
Nice. Some good sales tactics there. So point number 4, or a developer design challenge. And yeah, Jack doesn't really know anything about this, but we obviously work with a lot of property developers as an architectural practice, XP being kind of the main property developer client. But we want to work with more. Where I feel like the team are at the moment is heavily involved in private residential. So not all of the team have necessarily seen the start of property development projects or worked with me on XP projects, for example. So what I wanted to do is set the team a challenge. I gave them a theoretical project to work on. I sent them a brief of that project as if I am a developer going to an architect and saying, I'm looking at this scheme. What can I do with it? Because fundamentally, as a property developer, that's really where your starting point is. Everything will come out of a bit of a feasibility study to understand how many units we think we can get, what size are those units, what are the constraints, what's the planning process, what's the strategy, and all of these things are what a property developer wants really quickly at the start of a project to see if it's like a go or a non-starter or a goer. So I challenged the team. I sent them a brief on Monday night to drop into their inbox at 9 o'clock Tuesday morning. And by 10 o'clock, I wanted them to respond with an email to me with their thoughts on the project itself. Now that could be sketches, could be just written text, could be, massing models, or whatever they felt like was the best medium to get their message across. It is what it is. And that was, so that's what we did. We then sat down in the afternoon. We talked through the scheme and looked at each person's response to me and kind of discussed it from start to finish. And it was a great way to start giving the team some understanding of how us as property developers think. And if you're working with architects, you often need that really quick understanding and high level appraisal of a site. And that was really kind of my now that is my role in XP's business. And very early on, between Jack and I, he'd sort of send me a site over. I'd take a look at it, probably spend an hour and a half kind of reviewing the high level intricacies of it, looking at the constraints, thinking about what's possible from a design and space planning perspective, thinking about the planning opportunities and the strategy that we might do. And that's really kind of a massive skill to have as as an architect. So I wanted the team in Aura to kind of get an understanding of how we think as developers, thinking commercial, thinking in a commercial mindset around what's the best way of maximizing value from this opportunity. What are the red flags in terms of the possible constraints? And then actually kind of how would we approach this, or how do we suggest we approach this from an architectural perspective? And yeah, really, really good feedback. I think it was a great opportunity for people to kind of get a bit creative, hear about some of the planning strategies that we use using permitted development and full planning, and going back in using class MA and PD to enhance schemes that we've already got planning approval for. And, there were some good questions that came out of it, like, why don't you go in for the external works full application first and then optimize with a class MA PD scheme thereafter? And the reason being is that as a developer, you're holding costs on site, you've got finance costs, you need to move fast, and you need the assurances that comes with a change of use. So if you're converting commercial to residential, you want that to be, secured, and get a piece of paper that says you've got planning approval to convert this to residential, because it instantly improves the value of the site and it speeds up our process and de-risks the site from a developer perspective. So I think giving my team of architects a good insight into the mentality of how we think as developers, giving them and honing their skill sets in appraising sites really quickly. That's why we do dub Aura Architecture and Interiors architects for developers by developers, because I want most of my team to really understand how us developers think. So yeah, it's good fun. And if you're listening on YouTube, watching on YouTube, thank you very much. We do package up this video and put it onto audio format. So if you are on Spotify, Apple Music, Amazon Music, Castbox, any of your podcasting platforms, thank you very much for listening. You will be tuning into the Property Experts podcast. And we've been getting some great feedback, and it's getting great traction. If I can ask one thing of you, it's to follow, leave a review, and also just send it to one person that you think may benefit from listening into these conversations. And the moment you've all been waiting for, I'm going to rock back to point number one, which was about kitchen costs and Howdens. Rob posted £6,300 plus VAT. Luke says £8,500 plus VAT. Jack, what do you think?
It's going to be an absolute cop out and jump in the middle of those two, because I think they're both pretty good guesses. But we are Bosch Appliances, laminate. I'll probably go. I will go in the middle. Let's go 7.25 plus VAT.
Yeah, that's pretty much bang on, like £7,200 in between those two options. Yeah. There's a bit of tweaking that we want to do. I think I've managed to get the dishwasher thrown in for free and various other bits and bobs. But the key thing I wanted to take away on this is I've split it down in the image on here. So cabinets out of that £7,200 are around about £4,000. The appliances are about £2,000 for the specification that we've got. And a compact laminate, like 2 lengths of compact laminate, are about 900 quid. So actually the appliances are somewhere between £2,000 and £2,500. And then the compact laminate is about £800 when you factor in all of the backboards and upstands and all that sort of stuff. So yeah, 4,000 cabinets, 2 to 2.5 grand for appliances, and then the best part of £1,000 for the worktops, there or thereabouts. But yeah, hopefully that's useful for people to see sort of what you get from Howdens, the size of a kitchen that you can get for £7,000 plus VAT. We generally factor in about £9,000 per kitchen for these types of assets. We're looking at sort of 400 to 450 to £550 a square foot resale in the areas that we're working in. And that's typically, £9,000 is what we'll factor in for our kitchen budget.
Question.
Yeah.
Is that pre-negotiated price?
That is no. There's a fair amount of negotiation in it, yeah. And she's throwing in the dishwasher for free, and yeah, it's basically about 30% discount on almost everything. Dishwasher thrown in for free. But I will be going back and asking for more. It's as simple as that.
Cool.
Yeah.
Cool. I was actually looking at a stack the other day of the second HMO we did, and it was painful. A kitchen literally identical to that, back in like 2019, and it was like 3,600 plus VAT from Howden.
Yeah, and it's over sort of the past 3 years. The timber prices have gone up by half, and yeah, it's all snuck up. But I thought it was half decent value, to be honest. I've asked for a cost for stone quartz worktop, which from my sort of brief analysis, I think you can probably get for sort of £400 a square meter. A sort of silestone quartz worktop, which obviously adds to the sort of luxury type finish. If you're in an area where stone worktops are, like most of London, I guess you're going to be putting in stone worktops. But yeah, I mean, I'd love to know in the comments below what everyone else is doing. Are you going to Magnet? Are you going to Howdens? Wren kitchens? What are people using, or are they going completely bespoke? Yeah, let us know.
It's probably worthwhile also touching on, just as a tip, I know we have discussed this before, but if you're doing a conversion where your VAT on the build is 5% or a new build at 0%, make sure your contractor buys all of this kit for you, and then you don't have to eat the VAT on the purchase. That's a little top tip. We do it in all of our HMOs because obviously we want to pay 5% on the kitchen, and we are not a VAT registered company because our rent roll is not a VATable income. So great tip there, and I know that Ben does it in our developments as well.
Nice, cool. Quickly touching on this, so I didn't find out until I got there and Sam started talking, but after sort of 3 years of him running his podcast, I'm the first one to return, which is great. Yeah, so he's doing the rounds now. So he's not interviewed someone twice at all on his podcast until today. And Jack, you're going back in a couple of weeks, aren't you, after MIPIM to sit down with him and have a chat? But if you want to listen back to the first episode that Jack did with Sam, it's episode 23 on the Property People YouTube channel, and I'm episode 32. And yeah, we had a really good chat all about the various businesses that we run. We sort of went deep into the challenges within each of them, and the aspirations for the future. And yeah, I'm looking forward to kind of sharing that around. Sam's really done a good job over the last sort of year, I'd say, of starting to build and get loads of traction with this podcast. He's interviewed some amazing people. I can see them on the screen. Paul Higgs, I listened into that a couple of weeks ago. 40 years worth of experience, incredible. Yeah, John Howard, again, been in it for 40 years, built a portfolio of 4,000 properties. So I'd say after the Property Experts podcast show, Property People is the second best podcast out there. Sorry, Sam.
Network in your network. I think you put this in, Ben, but I've actually got stuff to talk about.
You've commandeered. Yeah, no, crack on. You go.
So I suppose Ben and I have done, I mean, we've always been, obviously hosting meetings with relative business people and business partners and business introducers and whatever it may be. But we last in 2023, we were heavy on the capital raise to fund two of our largest projects to date, which is Tame and Colney Hatch Lane. And to put that in perspective, a lot of people look in from the outside of our business and don't think that we go through growth challenges. And what I mean by that is, we see us doing a deal a month, whatever it may be, in capital raising. It's not easy. And you really, really do have to rely on your network. This is a people's game. And I actually do believe that the right people are more important than the right contact in some capacities, because they can help you deal with it. They build, a relationship with you and want to, make that right introduction and recommend you, which is obviously key. But leaning back onto 2023, our average investment with investors to date was pre-2023 was 450,000 across all the projects that we had delivered. And we needed to raise over $1 million for both deals. So it massively put us out of what we're used to in our comfort zone and our existing network at that stage. And it was really just relying on our network that helped us get there. And what I mean by that, network in your network, is if you're speaking to a potential investor or someone you're doing business with, let's say you're speaking to, two examples, an estate agent, and you say, have you got any of these deals? And they say no. And you can then go, do you know anyone that might have these deals? So you're tapping into their network rather than just using that one point of contact for you. Same with investors. If we're speaking with an investor and they don't have the funds, or they're not in a position to do the deal, we will say to them, do you know anyone that would be interested in this? Evidently, most of these high net worth people have high net worth friends, and they have high net worth friends. So don't just rely on, social media posting. You can also lean on a lot of other people's network, and your network is super valuable. There's actually people that make a living by just connecting people. So if you think about that for a second, if you're connecting into people's network, like a lawyer or a high net worth individual, their network is super valuable, and they're willing to then potentially recommend or help or whatever it may be that you need. So main point is lean on other people's networks. So I mentioned earlier on in the call, we actually met with the founder of like one of the leading law firms in London, and his network is insane. And we had lunch with him yesterday, and it was actually crazy the amount of solutions or ideas or people that he can put us in front of. And he actually has built built up a good reputation for connecting, as well as doing the legal work. And his firm, don't necessarily really need him in it any day anymore. But just to touch on it, that the people in your network also have a network, and definitely touches on them. I don't actually know what Ben specifically put this in for him to talk about himself, but I do have a few more points to really touch on about why we do network. A lot of people see that we speak at events or go to an event, and say, why do you do it? And also, we get good exposure from these video live calls and our podcast. And I think networking is sometimes the latest gratification that you can have in your business, because you kind of don't know who you're going to do business with, when you're going to do it with them, or if you can actually help them at any point, or vice versa, they can help you at any point. So you kind of have to always be spinning this plate at any given time, and make sure that when you're in a room, you tell everyone, you try and tell people what you do, and you tell people what you need, and then you try and find something that you can help them with. And that's pretty key, and what we focus on. And we've made so many introductions over the years, and we always expect that introduction will hopefully go down well, and then we might hear that there's a success there. So we're always very forgiving when it's introducing people. Question in from Ewan: Are there specific events you'd recommend, or are these built up over a period of time? Brackets, networking for investors. I mean, we've touched on it actually a few episodes, Ben. I don't know if you can recall.
Yeah, a couple of episodes ago, we talked about if you're looking for investment, maybe not going to property sort of specific networking events, or certainly the property investment type events that are run by education platforms. Because most of the time, the people at those events are in the same boat as you. They're looking for money, and you're not necessarily in a pool where the majority of the people in the room have money. You kind of want to be in business networking events, tax specialist events, those types of things where you're going to be surrounded by people with wealth that want to deploy and invest in property. So yeah, it depends what you're looking for, but that's certainly my take on it nowadays. You want to be going to things where it's not necessarily property related.
Completely agree. And for me, it's also different types of events. That there's certain activities that you can do where you rub shoulders with the right people. And coincidentally, it was actually oddly a school connection of mine messaged me the other day. He's doing some pretty cool things in Malta, and we're talking about maybe if we can do something together. So also rely on, you don't necessarily have to be out every night networking events, think about your existing network and meet up with those people first. It's lower hanging fruit. You might already know them. You might have shared a classroom with them or worked in a company with them. And that does help. That does give you a foot forward. But specifically, events, we tend to speak at property events. I think that's a better use of our time now than attending tons of property events. But we do, attend different types of events. And, MIPIM is very property, construction and finance orientated. But there's a lot of people there,
Yeah. Nice. Cool. So, just something else that we've, I guess, learned over the last couple of years and became apparent this week for various things. But why cheap labor is false economy. And I've got a sort of example here, and it also rings very true in our surveying practice, whereby, historically, maybe we've tried to bring in talent at the lower end of the sort of salary bracket and experience bracket, and it's been a false economy and hasn't given us the productivity that we expect or need. And just to give you an example, which I've got on the screen, in my architecture practice, a part one architect, which is basically somebody kind of studying at university or just finished their university, 2-year, 3-year course, is going to come out on a 24 grand salary, for argument's sake. Whereas a qualified architect with 5+ years of experience may well be on 40 grand a year. Now you think, okay, well, maybe I can almost get 2 part ones for the price of a qualified architect. But I can guarantee you're not going to get twice the efficiency out of those 2 people for 1 experienced person. In fact, it's quite the opposite. If you're bringing in young, inexperienced people, you have to manage them. There's a chain of management above them that saps time from the management and the more experienced architects explaining how to do certain things, shadowing them. And it's, in my experience, and we've just gone through a round of business consultancy with a company that does and works with another 20 UK architects. And certainly for the size of practice that we are, i.e. kind of 12 strong, to dilute the sort of person base with part one and inexperienced architects is just not a good return on investment. When you get into the realms of these big companies in central London, where it's 200 strong architects and Squire and Partners and EPR and all these sort of bigger players, they can afford to bring in sort of cheap labor and have the management in place to kind of train them up. And if you had 2 out of the 12, for example, that are part one architects within my architecture practice, there's a lot of management that goes into that, and they are, almost 15-20% of the actual resource that we have available to us. So it's just a false economy. You pay, you get what you pay for a lot of the time. An experienced, qualified person is going to be way more productive and way more efficient at the same job as 2 or even 3 people that don't really know what they're doing and need their hand being held. So I think when you're starting out a business, you try to, you're conscious that you don't want to increase your overhead by loads. You think you just need bums on seats to do the work. But I guarantee you, by investing in the right people with the right salary and the right experience, you're going to grow your businesses much faster than if you just tried to fill bums and get cheap labor in through the door. So yeah, my take. What's your take on that, Jack?
Yeah, I think it to some degree depends on the role. We were actually talking to that. I've brought this lawyer up 3 times today, but we're actually talking to that lawyer about it, and he said he would much rather a decent fee earner that costs more, that does get through the work and doesn't lean on other fee earners to learn and grow. But no, I completely agree with you, and it's I think it kind of, for an example, my friend runs an Amazon warehouse, and the the cost of their salary isn't known until that you learn how quickly they can pack.
Mm-hmm.
So, and none of them really have any warehouse experience pre-hiring. So I would say for a fee earning service based business where you do go through education and you do learn and bring in, most importantly, practical experience, that is super valuable for speed, understanding, quality, because those quality and that speed obviously costs money over time. And, you know, when they're working on a project that takes 100 days, if they're a third less in quality control and a third less in speed, that's your margin absolutely wiped out. So it depends on your business, is what I'm getting at. But I completely agree from a surveying perspective, a mid-level surveyor is going to be much better at fee earning than a junior or someone that hasn't got any educational background at least to learn, because then they're also taking up the fee earner's time. So I think there is analysis that you can do. And my friend looks at, you know, what they actually pack. And that's how he quantifies their I suppose their cheapness, because it's a very quantifiable, you know, it's tracked because it goes out in the post, so they know how many packages they've done that day or that week, and then it falls into how often they're absent. So if they're super quick but they're not in 2 days a month, then they might actually be slower than someone else. So yeah, it depends on the role. I think definitely management and higher level stuff, you can't really quibble at the good stuff, believe it or not. From meeting with Dorian, he takes on, so he has a site manager on each project, and he's currently on site on something ridiculous like 12 sites, you know, all 30 to 70 unit sites, so big meaty stuff. And he used to bring in really really good trades that you know maybe want to take a step off the tools as site manager, and he learned that on the breadth of the project, it's better to pay a really, really good site manager that's from a tier 1 construction company. And I'm not talking, you know, I was part site manager when I started up the project management firm, and I was on, let's assume, 25 grand to 28 grand salary, which is, you know, you're basically a tradie that's now not on the tools and you're managing everything else. But Dorian pays like 50, 60K for a site manager. And as a result, his project is much better, well organized. Day to day, he gets incremental margins and improvements and speed and less waste. Everything's better organized. And that value of that individual, he said he's overpaying for his company size of what those site managers are, but the proof is in the pudding on what they actually produce at the tail end. And he learned that
good
from
ROI.
trial and error. Yeah.
Yeah, nice. I mean, I guess it's worth kind of looking at the flip side of this. You know, we have virtual assistants that are over in the Philippines within our business, and they are cheap, and they are you know, very qualified for the most part. So you know, don't take it with a, you know, don't take these sort of things the wrong way. I think certainly in the UK, where we're coming at is, you know, pay for experience, and it will pay dividends. But there's always a time and place when it comes to admin, when it comes to marketing, kind of given that we work in this sort of worldwide economy now. You know, there are opportunities to outsource things like that overseas that can be done anywhere, and still get really good people for cheap labor. But yeah, thought it would be an interesting topic for people to see, to talk about. You know, we'd love to know what you guys think down below. Cool. Private or council? I mean, for me, this isn't even a question. Like, I can't remember the last time I used a council building control. Can you?
Yeah, I can.
Yeah. How'd it go?
Only because it was painful.
Right.
I'll tell the story. Well, I can tell the story now if you like.
Yeah, go on. Yeah.
So bought a 3-story house in Abingdon. Got ordered the planning permission to extend the ground floor. There wasn't a hallway from the kitchen to the front door. So building control, because it's a 3-story building, would like to see a fire route for someone in the top floor, but it wasn't there originally. So we weren't actually adapting the property at all. And you can the sort of standard rule for building control is, you know, what you're amending, you obviously needs to be up to grade, but what you're not touching can stay as it is. That's, you know, we've got houses that've got really low ceiling heights. We've got houses where the staircase isn't protected off the kitchen and things like that. But anyway, we went through the whole job with a public, so council-led building control inspector. He was fine, and we basically completely re-renovated the house, and we were now selling it. And it came to the point, to the very last inspection, when we had finished the house, decorated it, had our builders clean, and we were signing off the project. And then we got elected a new building control inspector that had not been through the project throughout the whole duration. And I suppose that's not necessarily the council's fault. You could have that in a private company, but they are just not commercially minded, and that makes our life difficult. So anyway, this chap insisted that this wall needed to be rebuilt, even though it wasn't, you know, built, and because it wasn't even there in the first place, for the protection of the residents. And I sort of said, well, it wasn't there before, so if we put this board up, you sign it off. What's to stop the person that buys the property just to remove it? And he said nothing. And I was like, so you literally just want me to put up a wall for the sake that it's probably going to get taken down again by the future buyer, and that's that. And he was like, yes. And it was that paperwork exercise that really frustrated me, because he couldn't prove that there was that one there before, and he couldn't prove that there wasn't one there before. So, you know, at what ground you have to, and then you have to go down the worst case route for us as a developer, and it just wasn't very pragmatic. And we actually did prove that it wasn't there because we had photo evidence, but he wasn't buying it, and blah blah blah. But anyway, that's why we don't use them anymore, and we use private.
Yeah, good. I mean, I don't have much more to say on this. The last time I used a council building control, I think, was probably 15 years ago, maybe, sort of in my sort of first 4 years out of uni, I would say. And we very quickly moved over to private. I just think from a speed and response and a pragmatism perspective, you know, these guys in the private sector obviously have profit to make. They're on a time clock. Building control from the council bodies aren't. And there's really, just like the planning process, no speed, no efficiency, no sort of proper resource in that department. So private all the way. Yeah.
Very good. Multiple dwellings relief. Disclaimer: I'm not a tax advisor, not a stamp duty allowance advisor, any of that nonsense. But we can introduce you to a good one that is qualified, and you can lean on their PI cover if you ever need to. But obviously, the budget announced that multiple dwellings relief will be dropped. Is dropped, which is quite a kicker for developers, and it's quite interesting actually. We were actually having a discussion about this other day. So what does this actually mean? So multiple dwellings relief is when you're buying multiple properties in one transaction, and you can offset to a cheaper relief because you segregate the assets down to their numerical size. So if you're buying 10 assets for 1 million, you divide that 1 million down by 10, and you pay the reflective amount of stamp duty tax, because it's what's the terminology I'm looking for? Exponential. So the more value the asset is, the higher the stamp duty that goes up. So then if you're paying at one house that is worth £1 million, it will be much higher rate in stamp duty than the mention where I divide it up by the 10 units. That's now being abolished, and it was great for development companies like us, because it meant that sites that you're buying that need revamping and work, and are maybe a tired landlord that own a block of 14 flats like we bought, which we won an award on. We managed to negate a lot of the stamp duty tax on that for the purpose that we were buying it as one bulk purchase. But what hasn't necessarily been touched on is you can actually get commercial stamp duty relief on 6 dwellings and above. So that's flats, houses, 6 units within one transaction. You do get relief for that as a commercial rated stamp duty. But another thing I wanted to touch on is, who is actually seeing this? Is this just a developer's loss now that we have to wear? Or is it actually where we now put it into our spreadsheets on everything that we're bidding on, and we just bid less for the site? So the landlord is taking the hit on that. And I don't know if the government goes to the nth degree to think about who is actually going to be wearing this cost. Because if you owned a block of 14 flats today, and your net yield, so the yield after all your finance costs, are 6%, that has now gotten to a worse yield because of the stamp duty implementations that people are going to have to pay on a block of flats that's less than well, if it's over 6 flats, you'll get commercial rent and stamp duty, but multiple dwellings relief was actually, in most occasions that we utilized this, was actually cheaper than commercial stamp duty. So it is a bit of a kicker. It's going to probably fall on eventually the landlord during the transition period. It might fall on developers if they're not renegotiating. And if you do want any tips on renegotiating after getting something agreed, wind this episode back and listen to what I was talking about earlier. But it's news. We need to start factoring it in. Our spreadsheet's going to change. Your spreadsheet should change because it's reality and we've got to get used to it. So, I mean, it's a little bit easier because working out multiple dwellings relief was a little bit of a mathematical task that we'd always carry on ourselves and then send it over to our lawyer and they'd say, what is this? But yeah. Anything else to add, Ben?
No, I think you've nailed it.
It's probably worthwhile saying, actually, every single transaction we ever do, we tend to get stamp duty advice from a tax advisor. And if you want an introduction to any of those, let us know, because it's a no win, no fee basis. So they will take a fee on the saving that they create for you. And they'll quite quickly tell you if they don't think there is a saving. And there are certain, allowances that you can actually capitalize on. So we're actually making a claim for our building in Wallingford because it's moving around a lot. There's a lot of structural character, I'll call it, and it's unlivable. It's technically unsafe in some of the areas because you might fall through to the ground floor. So, there's certain things that you can be realized on. So if you'd like an introduction to someone that specializes in this, make sure you DM us or hit us up or contact us on info@xbproperty.co.uk.
Very good. So on to our special episode for next week. As Jack said earlier, we're in the south of France at the biggest European real estate sort of exhibition in Europe. And so we will be calling upon two of our very good friends and sort of acquaintances and extended network of consultants and suppliers to give us one market update from a financial perspective. That is with Stefan from Willow Isle Capital. And we'll also be bringing Alex Hearn, who is the managing director of Silentern Building Consultancy, in to talk about the state of affairs for build costs and discussing everything about construction, the tender process, and what's going on in the wider market in terms of health and safety and project management. Anything else you wanted to add?
Yeah, I mean, if you want to know what the construction market's doing, the finance market is doing or done, just tune in and we'll be here as always. And a nice rest for you guys to hear less of Ben and myself and some other people in the industry doing really good things. And I'd actually like to touch on, I know that we angle this, we angle this content to not just be about property, it's to be about business. And Alex and Stefan have built both themselves successful businesses from scratch. So there's a lot to be learned from them as well, not just what they have to say about construction or finance, but also as business owners, which is why we're networking with them and staying in the same place as them during France. And we'll be hoping to tease out some good value for you guys next week.
Yeah, I think it'll be quite conversational. We'll sort of press them a bit hard on things that are relevant to us and therefore extended sort of relevant to you guys as property investors and developers as well. So yeah, really looking forward to that.
I would suggest any questions that you would like us to ask next week. Ben and I love being challenged, but if you want a comprehensive answer, if you could get your questions in, you can comment on this video here and we will make sure that we ask them for you in the live next week and give them a little bit of prep because, Ben and I are seasoned professionals now, a year and a half into doing these lives and dealing with questions. But it would be good to get the questions ahead of the time.
Yeah, brilliant. Cool. And that's everything for this week. If you're listening on YouTube, great, but also head over to Spotify and Apple Podcasts. Do like, subscribe, follow, and all that good stuff. And please share this with one person you think can get value from it. And see you again next week. Bye.